Maxed Out began as a comedy. I was at Sundance a couple of years ago looking to see a movie called Super Size Me because originally I wanted to make a film about fast food and why Americans are getting so fat. Sitting in line, it turned out that someone had beat me to the punch with a very similar last name, Morgan Spurlock. So I thought about what else I could write about, and the two addictions that people have in this country, the two New Year's resolutions every year are get out of debt and lose weight. And they're those two things where the more people try and lose weight or the more people try and get out of debt, the fatter and the more indebted they become. So it's kind of a mystery. So I thought, well, I'll take on debt now instead of fast food. The first thing I did was I hired a casting director for a reality TV show because we thought we were going to find all the $30,000 millionaires and the crazy people building McMansions they can't afford. We were going for the kind of a romp angle through this amazing consumer culture and this affluenza, as some people call it. And that's where we began. So the film on which the book is really based begins with this realtor in Las Vegas building a 10,000 square foot mansion that she knows she can't afford if interest rates go up. That was our launching pad for the book as well, which is really just my journey through the country learning about this subject and learning why people can't seem to get out of debt. So we started out with these kind of bizarre cases we'd read about on the internet. There was a Marine sergeant who paid for a boob job with her military credit card and bought an Escalade with her military credit card. There was this guy who murdered his family over a relatively small credit card debt. There was this woman in Las Vegas, this realtor. There was Robin Leach, who was in the film. The Duchess of York, who most of us know as Fergie in the United States, who got divorced and then nearly went bankrupt and has been doing endorsements for years and years to try and pay off her debt. But those kinds of stories. In the process of researching and meeting some academics and meeting some journalists and starting to really read up on the subject, it became apparent that the bigger subject wasn't really how people had changed over the last generation, because you can go back to the beginning of this country and find speculators like George Washington or Thomas Jefferson, who was in debt his entire life. This has always been a country of optimists and of wishful thinking and of speculators. So that really hasn't changed that much. The last century, you can go back to the 1920s, the whole banking system itself nearly imploded because people were spending too much money and banks were lending them too much money. Consumer behavior really hasn't changed all that much in the past generation, and certainly not enough to account for the huge rise in foreclosures and bankruptcies and so forth. What's really changed is how easy credit has become available and how credit has really been pushed on people by the financial industry. That's been the real revolution. So that became the focus of the book and became the focus of the film pretty early on. What we discovered was really quite shocking. I think, like most people, I assumed that we still earn credit, that the banks are rationing out this precious commodity, and if we get a letter saying that we're platinum or we're titanium, we're a preferred customer or a signature customer, that means we did something good. And what I quickly found out was it almost means the opposite. The best customers for these companies are people who are willing to be irresponsible, who are willing to take on a little more that they can chew, but who will need more credit in the near future and who will be willing to pay a premium for that credit in the forms of high interest rates and high fees, because that's where the money is. Pretty early on, it changed my whole outlook onto what being a preferred customer meant or having a platinum card in my wallet meant. And from there, it got pretty insidious. We went to the inner cities in Brooklyn and in Queens, where there are a lot of mortgage scams and financing scams. We went to the backwoods of the Deep South in Mississippi, where we found the poorest of the poor being targeted by the largest banks in the world, which I found quite shocking. Just found out a whole lot of disturbing things. I think the most shocking for me is still the fact that your credit score, which now determines not only how much credit you get, but a lot of times whether you get a job or an apartment, insurance, utilities, this number has nothing to do with your income. It's basically a measure of how well you can make payments. And you may be making those payments with borrowed money from someone else. You may be, struggling like crazy to make those payments. You may be surfing the debt, using one debt to pay off another. But that's really what your credit score is a measure of. So the more credit you get isn't correlated at all to how much money you make, which seems pretty logical to me, but it's not. This book is not a how-to book. It's not an anti-banking expose. This is a book that teaches you about the financial industry circa 2006 and how it really works. And I think it's very valuable. It was very valuable to me to learn this. And I think it's really essential that everyone knows how the industry works, because most of us are still walking around with this assumption that banks are the way they were 20 years ago and credit is rationed. If we get a loan, it means we can afford to pay it back. None of these assumptions hold true any longer. Older people are getting into trouble because they think that the credit card company that sends them an offer in the mail is the same as the bank that they had to go beg for a personal loan from 30 years ago. Younger people are getting into trouble because they're being targeted at a very young age by credit card companies, and they're being told that they've earned something, they've graduated. There's all sorts of very insidious verbiage that's being used to ensnare younger people into a life of credit and a life of debt. People in general are hurting because their incomes haven't kept pace with expenses, and they've been encouraged to use credit cards to bridge the gap, which is a really bad idea. The use of high-interest, high-fee credit is what one person I talked to called a cement life raft. It's just not something that's going to do any good over the short term or the long term. This was my road trip around the country, and this was my coming to grips with how the financial industry behaves. And I think, it's for anyone who wants to understand how their credit card really works.